Okay, so first of all, let's do the PMIs. So PMIs, remember, for the new traders or new fundamentalists in the audience, PMI data, today is PMI day. We've got PMIs coming out of the US, PMIs coming out of Europe, and the UK. So, I mean, which is part of Europe, but you get my point. We've got PMIs all the way around. And so it's going to be a really interesting thing to see how this plays out. Now, so far, we've already had PMI data out of Europe. So let's discuss that a little bit. So we had French and German PMIs, which German, of course, Germany and France are like the big powerhouse components of the Eurozone. And we could see that PMIs came in lighter than anticipated. The services PMI for Germany also got revised lower on the previous number. So the theme here does seem to be cooling PMIs. Now we had some stronger than expected French services PMI, but for the most part, we see a lot more red here than we do green. And you do have a little bit more strength in the UK. Actually, I'm just curious, if we look at Euro Pound, is this down today? It is. Okay, so let's talk about what these numbers mean for a second. Then we'll get into the US PMIs, which are coming out in just a few minutes here. PMIs are really important because they show us what purchasing managers' forward-looking guidance is looking like. And the PMIs are so important that on the Edge Finder, we've dedicated pages just to studying them. So services PMIs, right? We can select if you're someone in, in fact, I want to broaden this a little bit. I think 6 by default is too little. So here's what we're going to do. We're going to broaden the default range on this. Let's go. I'm going to make it 12 months because I think it's nicer to have 12 months of data on the screen by default. So we've just fixed that. Okay, so we're looking at this and we say, all right, here's how PMIs in the US have been looking. PMIs have been pretty strong in the services part of the economy. Remember that with PMIs, a way to read this is that when it's above 50, it's a growing or expected growth. And if it's below 50, it's expected decline. Recently, we've seen a couple readings that have dipped underneath 50, which has been broadly accepted as, hey, the economy may start to see some slowing. Not crashing, it's not like we're in like low 40s or anything like that, but here's manufacturing. This is the manufacturing part of the economy. And we can see that manufacturing has been pretty consistently in decline. So services is a big component of the US economy as well as like the UK economy. And by the way, you can select other things here. So if I go to European PMIs, you can see that European services PMI has been pretty strong. Let's go take a look. And also we got to repeat our function there of, you can see European manufacturing PMI has been much, much lower, much weaker for some period of time now. Weak PMIs out of Europe today were strong for gold. How do we score this? What are you talking about, Nick? Listen, here's the thing, okay? If PMI data is coming in cool, that's showing economic weakness. Economic weakness makes people slightly more favorable to gold as people lose certainty in whether or not the central banks of the world can properly stop a recession or stop, inflation getting out of hand. Remember that if the economies of the world start slowing a lot, the theory is that they may print a bajillion dollars, euros, pounds, yen, etc., to try and stimulate the economy. Massive spending of money equates to gold going up in value, usually. Right? So if we see, like in 2020, remember 2020, guys? Have you seen gold during 2020? Check this out. 2020 was the year of spending by the central banks globally. Look what happened to gold during that time. Gold skyrocketed off of fears of the economy going down, as well as massive money printing. It was a very bullish period for gold. It's why I think that we could see, with central banks looking to cut interest rates again, like they did in 2020, it's for a different reason. We're not going into, a COVID situation, but we are seeing the economies of the world, as I just indicated through the PMI data. We're seeing some cooling in the global economy. And with that cooling, it could lead to gold looking good. That is, long story short, that's part of the reason why I'm long on gold. It is also popping up on the top setups page, which has been, helping me find the setups that I take each and every day on my show and in my own trading.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
Google actually had rockstar earnings, and this is where people get very confused because earnings for Google came out very good. In fact, hold on, there we go. So earnings for Google were good. You can see that if we take a look at earnings on Google's side of things, the earnings came out at $1.89 per share, which was stronger than anticipated. Their earnings were good. Earnings were higher than anticipated. They beat on how much money they made. They also beat on how much revenue they generated. Their revenue was up and their earnings was up. So Nick, the market is manipulated because the stock is down today. Google's down 5.3% in the pre-market here. Actually, the market just opened up. It's down 5.3%. The market is manipulated. It's all a scam. No, that's the thing is what is confusing to new traders is they might say, well, Nick, Google's earnings were bad. I'm sorry, Google's earnings were good. Why is the stock down? The reason is because the expectations for these mega tech companies are so high that it seems like as we go into this earnings season, not only do you have to have great earnings, you have to have stellar guidance and impeccable earnings. And so the market might just say, hey, it wasn't impeccable. It was good earnings, but it wasn't impeccable. It wasn't perfect. And so we're going to sell off the stock. Not only that, we also saw Tesla, who actually had bad earnings. And you can see this is what happens when the stock has poor earnings. Their earnings were bad. Check this out. Tesla missed on their earnings pretty big. So they were expected to come in with 61.4 cents per share. They got 52. That's a big miss. So they missed on their earnings. Revenues were about in line, but they missed how much money they made. Not only that, I didn't listen to the call with Elon, but Elon Musk, I guess, was making a lot of changes within the company, and that uncertainty may also have contributed to a little bit of uncertainty with the stock price. So we see Tesla down just shy of 10% on the day. Very violent sell-off on Tesla. And, this is the reason I bring this up is that this is leading to the market today selling off. Remember that tech earnings are so important to this market continuing higher. If you don't get good tech earnings, it's going to be rough. And this might actually be the time where I get stopped out of the NASDAQ. So if we go lower, if we continue to break lower today, that is going to be a signal for me to go ahead and say, whoops, this was not a good entry. Turns out earnings were not as good as expected for some of these key players. And that's just going to be me getting out of the trade. In fact, I actually wouldn't mind if I get stopped out. My next entry point that I would probably try for would be down in the 19,000s. I would actually really like to see prices get down there, in which case I could probably get some good risk to reward. Got the stocks over here, dollar index, gold, and then some currencies here as well. Should be, let's see what we got. Okay. Dollar index not making too much of a move. 15 seconds after. Let's see, maybe we're just getting a slight delay. There it is. Okay. Flash services PMI coming in stronger than expected, and manufacturing PMI coming in weaker than expected. That's a, did they revise this at all? Revised from 55.1. So that's a generally stronger PMI data for services. Not a huge reaction from the market. US 30 slightly higher off of this. DXY flat. NASDAQ not moving too much off of that. Gold briefly dipped, came right back. Let's go back over to our individual view. Let's have a look at our USD CHF. Would love to see this take out the lows so I could trail a stop. I'm actually going to trail a stop anyways. We're back down to the lows. I will update that inside of the members group, inside of Discord. So in fact, I'm going to write that down that I have to remember to do that. So ladies and gentlemen that are in the Discord, I will be updating that shortly after the stream ends. My NAS idea is looking silly, but my gold idea is looking okay, and my dollar Swiss idea is looking okay. So I'm kind of got a mixed reaction, but I wanted to get your thoughts on this move in the index level today.
Yeah.
Google and Tesla. Tesla poor earnings, Google strong earnings, but not quite enough, I guess. What are you looking at here today? Is this market looking like it wants to roll over further?
It certainly appears that way. I mean, I don't know. I mean, Google was fine on earnings. I mean, it beat earnings per share, beat revenue. Google missed on revenue. Actually, Google or Tesla. Did I say? I don't know what I said.
Yeah.
Tesla.
We know what you meant. Tesla missed.
Yeah, Tesla missed on earnings per share, but beat on revenue.
Yep.
I mean, Tesla got a little big for its britches with that like 100% run since the lows here in April. So I could see this pullback. I mean, I'm actually watching a credit spread right now that's in profit. I did a in the money credit spread. So I have bear call spread at 230 by 230, 250. So that's in profit. That's, I collected like I want to say I collected like $1.75 out of 250. So I'm trying to generate, I have a 355 credit if I can get 50 cents or better. Let me see here. I guess I'll share my screen. That would be helpful. There we go. All right. So my Tesla trade, it's right here for August 2nd. But I'm probably going to close out the trade, maybe today or tomorrow. So my 355 is already trading for 290, which, I mean, my max profit's going to be, that just jumped up. My max profit's going to be about $1. So if I have 355 max profit of $1, that means that if this hits 255 debit, I'm going to close it because I took the trade on both sides. So you can see here, this is my in the money bull put spread 270 by 270, 250. That's going to be a full loss. But this one, now that price is below it, as long as this stays where this is closing, out of the money, that's going to be what I want for full profit on that one for about $1.75. So I lose, $1, or I lose 75 cents here, gain $1.75 there, roughly $1 net profit on the contract. So not a bad play. Keep it cost effective. Netflix still hasn't moved a lot from last week. I'm curious what the catalyst really was for the sell-off. I mean, all I'm seeing right now is big tech earnings drag exchange funds lower, but it's like, okay, so did Google have like weak guidance moving forward? It's like, what would Google be saying? It's like they're not consumer based. I mean, actually, I take that back. YouTube revenue was not hot for Google. That was like the one I looked at the report yesterday. It's like everything looked pretty solid to beat expectations, but somehow YouTube, which continues to be like I think YouTube is one of the best platforms for finding sessions like this and education for a ton of stuff.
Mm-hmm.
But I guess they're competing with the likes of TikTok and other platforms. I mean, Instagram is your Facebook. Meta owns Instagram. But look, man, I think at the end of the day, this correction is needed. I'm actually happier this is happening now versus like October, November.
Yeah.
I mean, to me, this is like, okay, we just settle in. Like, we've had a great first half of the year. You and I talked about it yesterday on the Trading Battle show. First half of the year, most of the time leads to higher second half of the year. Now, it may not be the same, but a pullback, a pause, some type of reality check is good. And you just got to wonder, like, how awful does it actually get? So if I take a look at my SPY, Basha says $1 profit. Well, on an option trade, $1 can be a lot of things. You have 10 contracts, that's $1,000, dude. So, all right. I'm looking at this. If we have this, let's say 1, 2, 3 move. I mean, I'd said this before. If we're going to see a continued sell-off, 7 to 12% is my SPY correction window, and NASDAQ would be 10 to 15. So they're the same trades technically. It's just the implied volatility of the NASDAQ is a little bit higher. So that kind of 20% increase in volatility typically yields a little bit more percentage-wise, and that's what I see technically happening. So I'm not necessarily fighting this. I mean, I think my P&L just turned red on the day. Nope. I mean, I've been up, for the day. In addition to, I mean, it was like up $9,000 like 20 minutes ago, and now it's flat. But I also have a bunch of hedges going. So if we start to get really, really nasty to the downside, my VIX trade should be looking better. If we spike up to fresh highs on the VIX, which hopefully today's price action leads to that. But I have some E-mini futures hedging. I have some NQ or some NASDAQ E-mini futures hedging.
Wait, so Chris, you're just slightly negative or positive on the day. That's really impressive on a day like this. That's awesome. Congrats on that. I've got I'm down on the day, but I'm down less than the S&P and the NASDAQ by a meaningful amount, just because again my gold trade is doing okay. Yeah. This is something I love, Chris, to talk about with gold, that maybe one of the biggest reasons that I like it is it's less correlated to the stock market. I feel like I can go over here and I can play gold and do my thing on gold, and it does matter what the stock market is doing, but not always. I mean, clearly look at today. The spread between gold's performance and the NASDAQ is clear that the correlation is not one-to-one by any means. There is probably some correlation, but it's very low. And the age-old concept of adding more uncorrelated bets to your trading is one of the greatest ways to reduce the beta in a portfolio, right? I mean, straight Absolutely. Up. I mean, so yeah. I love gold today. I love TLT today. TLT, I look at these days, Chris, this is something you have to think about as a trader that is not fun when you're getting started, because when you're a new trader, your thought is, I'm not making money today. Why am I not making money? A professional trader says, I'm losing less today than what I could be losing if I was just a passive investor. It's all about trading against the index or your benchmark, whatever that may be. If you're somebody who's a more, conservative trader, maybe your benchmark is like, I just want to beat TLT. I just want to beat my passive hold. Right. I don't know. Speak on that for a second. Just share with your thoughts, like on a day like today where you have really good performance, even though you might not be making a lot of money today. If you are, if anyone listening right now is not down by 1.3 or more % today, you're actually having a good day. If you're anywhere above that, your day is decent.
Yeah, I was just looking. So I had to get some permissions from Tasty Trade for FXY. I was looking at a $70 call, which is out of the money on FXY. It was trading for $1.25, which is now trading for $3. That right there, it bothers me, because I mean, again, it doesn't matter because I didn't take the trade, but $3 to take, or $3 now minus the $1.25, $1.75, you're up. Oops, you'd be up 140% in that position in like the last 2 to 3 weeks of trading, as soon as this yen thing started to take off. So, to your point, non-correlated is good. My non-correlated trades, the one thing that's a bit surprising is we are seeing oil. I mean, oil and energy are typically good non-correlated assets as well. Oil showing a little sign of stability here around $77. But the scare of like slowdown globally and less demand in China, oil's been dropping. Copper's been getting smoked to the downside. Copper, I mean, they call it Dr. Copper like it's this PhD in economics, but this is not a good sign for the global economy if copper is just tanking from these highs. So anyway,
gold being up, you have to wonder too, is this something on the geopolitical front? I know, Chris, that yesterday I'm going to controverse myself because I went long the NASDAQ. It's not working out well. I got stopped out already. Okay. But I want to talk about this for just a second, because I talked about yesterday how I think that monetary policy is arguably more important in my view, actually not even argue, is pretty much more important than who becomes the president. Yes, fiscal policy is important. The uncertainty, though, is really the part that I think the markets are caring about. I think I made this quote. I listened back to our battle yesterday. I listened back as narcissistic as it is. I listen to myself talk a lot because I try and improve how
Good
I
point, Nick. Good
convey.
point to yourself.
I listened back narcissistically to myself yesterday, and I was talking a little bit about this concept of like with the election, the market just doesn't like uncertainty. So if Kamala Harris swings back into, if it becomes a more 50-50 election in any way, the markets probably won't like that because they won't like the uncertainty. If it swings all the way to Kamala Harris or all the way to Trump, I feel like that's better for markets either way. Would you agree or do you disagree?
Well, I mean, look, we had Trump that felt like it was swinging to 70+%, and the first thing out of his mouth is, "I'm going to make Taiwan pay for their defense," and it's like, well,
the market
doesn't love that. So
Yeah,
I mean,
right.
I don't think Trump has any guarantee of the market being certain about stuff unless they're talking about cutting taxes and better, boosting the economy. Look, I think either administration is going to be still pushing fiscal stimulus. I really think so.
I agree.
Have you looked at this? I think I showed this in my trading room the other day. Debt clock. It's a debt clock countdown timer. Is this real time?
Yeah, the U.S. debt clock. Chris, I actually fall asleep to this every night.
I never set an alarm to this because it's like it just puts me right to sleep, like counting sheep.
I just set alerts every time it gets higher. It sends me a text, so my phone is just
I was gonna say, like, your phone's blowing up with notifications. So this is the one spot that I thought was interesting. Interest on debt, right? $900 billion. And if you look at this for our largest budget items, military, Social Security, Medicare, Medicaid.
Interesting.
This is also a reason, like, Boris asked this question yesterday about, the Fed cutting and why. I mean, I think that it's not only a consumer cut, but I think this is the Fed also taking off the pressure of financing debt at just a ridiculous level. Look, the Fed doesn't want to stay at 5.25%, 5.5%. I listen to a lot of podcasts and read a lot of stuff on how long could the Fed sustain servicing debt at 5+%, and it worked out to be about a year. I mean, once we got rates up, since the end of 2020 to 2023, that 5.25%, 5.5%, once we got there, we've gone about a year and a half of servicing that debt, and we're doing bond auctions every 2 to 4 weeks. I just think that, think about the difference in, we're talking about like buying a house at, instead of 6%, let's go down to 5%. Makes a big difference for a 30-year mortgage. You talk about, debt on trillions and trillions of dollars, saving 1%, saving 50 basis points, 100 basis points, or 150 basis points does change a lot. But honestly, it's like nothing. It doesn't matter. This is all funny money at this point. When you talk about a trillion seconds is 31,000 years ago, nobody can fathom how big a trillion is. So it's just all numbers, and it's like everything gets tossed around. We put a budget together, put a surplus package together, $500 billion. Yeah. That's not that far away from a trillion, but it's just like these numbers are astronomical. And anyway, that's the thing
is
crazy.
You're talking about, house affordability. I know we discussed that yesterday. You're talking about, but look at this too. I think I found maybe a little bit of insight into what is causing this pretty aggressive sell-off here today. And, I'm not going to say it's all UPS, but UPS is one point here. UPS is a great indicator of the economy, generally speaking, not perfect by any means, but if you see, performance of huge transportation businesses, you mentioned earlier, what was the thing you mentioned? There was something consumer based. I forgot what symbol it was, but you're just discussing one. Here's another one for you, UPS, and maybe the biggest fall in sectors today being XLY is telling us something too. This is the consumer discretionary sector ETF, XLY. You guys can pull it up on your own screen if you want. XLY, this has companies like Tesla, right, which are dragging this down. It has Amazon, it has Nike. Think of your companies that sell something that is optional spending, right? People don't have to go buy a Tesla. People don't have to go buy new Nikes. People don't have to, but people do have to go buy toilet paper. They do have to. Those are staples. These are discretionary consumer items. And
Yep.
today, them being down 3% could be giving us a bit of a picture in terms of what the economy outlook is looking like. It's looking like slowing is a fair consensus. Not only that, SMH, the semiconductors, I think of this as like the ultimate proxy in today's world of how the economy is looking. The semiconductors business model is all about servicing technology, which is the biggest component of our, global system. Are they demanding chips like crazy? Are their earnings wild, or are they slowing? So SMH being down, XLY today being down, maybe suggests that we, settle into a little bit of a cooling in the economy. Not only that, PMIs out of Europe were weak today, and there you go, gold is up. So seems to me like a bit of the consumer's hurting today.
Yeah, and I think that's what I think needs the most help is if we're going to see any type of broadening, any type of healthy bull market, the consumer is going to need some help. Debt refinancing, restructuring, that's going to need some help. I would not be surprised if a year from now, year and a half from now, we're seeing 1 to 1.5% cuts across the board.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.